Hello, everybody. This is Alan Elman, the Blue Collar Investor, welcoming you to another sample trade video of a defensive 19-day cash secured put trade I initiated this week with a stock, Grupo Financial, taken from our premium member stock reports. Now, this trade was initiated on April 28th, 2025, and expires May 16th, 2025. I'm creating this video on May 2nd. It's a Friday morning to give you the updated status on this trade. Now, I've been doing these now for about 2 months, and I'll continue to do them because the feedback has been very favorable. And I promised you that I'd be showing you trades that were not only successful, but for those that weren't as successful. And this is an example of a trade that it's actually turned negative, but I'm still above water. So it's a great example of how setting up defensive trades can actually save us and protect us when share price declines. All right, let's get started. Now, why did I choose Grupo Financial? Well, here's a little snippet from the BCI Premium Member Stock Report from this past weekend. And you could see what I did was highlighted for you in the yellow row, Grupo. Okay, so you could see here that it's in the banking industry segment, which at the time was ranked A. Where did it come from? It came from our BCI database of securities that have certain characteristics that we've identified as potential option selling candidates. All right, now, if we take a look further, we could see that it has a mean analyst rating of 1.0. Well, folks, that's about as best as you can get because the range is 1 to 5, with 1 being the best. So that is stellar. It also has a bullish on balance volume, which means more cash is coming in to the stock on up days than on down days. That is a bullish signal. Now, interestingly, where I have the 2 red arrows, it shows that there's currently no dividend yield, but yet there was an ex-dividend date on July 26th of last year, 2024. Well, that simply means that the company stopped generating dividends. All right, that's really just an interesting fact unrelated to my decision to use this security. Now, you can see that the at-the-money implied volatility is quite high, 50.9%. Just to give you a perspective, that's more than double that of the S&P 500 at the time that I executed this trade. Now, the earnings date is 5/22, which is past the expiration date that I'll be using for these contracts, which is May 16th. So that's the reason. Well, these are the reasons why I selected Grupo. Also, the calculations, as you'll see in the next slide, met my goals. So let's now show you the initial trade calculations using our BCI trade management calculator. So we make the entries on the top. At the time, Grupo was trading at 63.79. And I used the deep out of the money put strike of 55 and generated 70 cents. So the spreadsheet will then give us the following calculations. If taken through expiration, this represents a 19-day trade. The break-even price point, which is the price of the stock minus the put strike minus the premium, is 54.30. So if you take a look at the current price at the time of trade execution, 63.79 down to the break even of 54.30, we have a lot of leeway to work with before this becomes a losing trade. Now, in the brown cells, you will see the initial trade calculations. The initial 19-day time value return is 1.29%, which annualizes out to 24.76%. If Grupo drops below the 55 out of the money put strike and we take no exit strategy intervention, we will then purchase the stock at a break-even price point of 54.30, which represents a discount of 14.88% based on the price of the stock when the trade was initially executed. So those are the two outcomes: a 1.29% 19-day return, or purchase the stock at a discount of nearly 15%. Now I'm showing you the actual broker confirmation of those 5 contracts that I sold at 70 cents. So $70 a contract times 5 is $350, less about $3 in trading commissions. All right, so there is the confirmation of the trade. So at the time that I made the trade, here is the unrealized trade status. We generated $350. The amount of cash necessary to secure those 5 contracts was $27,150. The put strike minus the put premium times 100 times the number of contracts. Okay, now this calculates out to that 1.29%, 24.76% annualized return that I showed you previously. Now, in order to avoid exercise or the need for exit strategy intervention, we need Grupo to remain above that 55 strike. All right, now let's fast forward to this morning. Again, May 2nd, about 10 a.m. in the morning. Here we go. Grupo had gone down in price to 59.75. Okay, not what we wanted, but we're still okay. It's so it's $4.04 below the original trade price. However, we're still $4.75 above the put strike, and as long as it remains above the put strike, it will not be subject to exercise. And it's $5.45 above the break-even price point of 54.30. Now, am I happy that the stock price went down by more than $4? Of course not. But this shows you the advantage of using these defensive trades in bear and volatile markets like we're in now, or the last 3 months of 2025, and how we do get that protection, perhaps, and still retaining the full initial time value return of nearly 25% annualized. So let's summarize now. We could generate significant returns even with a 19-day defensive cash secured put trade. And we can craft our option trades based what's happening today. You know, next week or next month, we may feel differently about the market and become more aggressive. In this particular case with Grupo, initial returns were still robust. Remember, almost 25% annualized, even though we're using a defensive play. And that was partially due to the high implied volatility of that particular stock and option. So folks, that ends another one of our sample trade videos. Please keep giving me your feedback, what you like to get, what you'd like to hear from. If you'd like things done a little differently, or if you love what we're doing, let me know. And we will craft our videos and our information based on your feedback. So thanks again for listening. I hope you benefited from this presentation. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.